Good day, and welcome to Sapphire Foods India Limited Q4FY23 earnings conference call organized by Orient Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Nachiket Kale from Orient Capital. Thank you, and over to you, Mr. Kale.
Yeah, thanks. Hello, good evening, everyone. Welcome to the Q4 and FY23 earnings phone call of Sapphire Foods India Private Limited. Representing the management on call, we have with us Mr. Sanjay Purohit, Group CEO and Full-Time Director, accompanied by Mr. Vijay Jain, CFO. I hope everyone had a chance to go through the results and the investor presentation which was uploaded on the exchange earlier today. Before we proceed, a reminder that this call may contain some forward-looking statements which do not guarantee future performance and involve unforeseen risks. A detailed disclaimer has also been published in the presentation. I would now like to hand over the call to Mr. Sanjay Purohit to take over. Over to you.
Good evening, all of you. Thank you for joining this call. This is our second annual results presentation since the IPO, and therefore, firstly, we wanted to place our 2-year scorecard in front of you, and then we will talk about the Q4 performance. I'm referring to page number 6 on our deck. FY23 has seen our best ever annual performance. So we delivered our highest revenue, and in a growing company, I understand we will always deliver ever highest revenue every single year. So 22.6 billion is the revenue that we delivered for the full year. But also from an adjusted EBITDA sense, we delivered 2.6 billion and our highest margin of 11.7%. The same thing is with respect to our adjusted PAT, and we had a deferred tax credit of 125 crores this quarter. But removing that, we delivered our highest ever adjusted PAT of 1.4 billion at 6.2% PAT margin. We also had our highest ever new restaurants addition of 164 new restaurants, KFC, Pizza Hut, and in Sri Lanka. It was the best ever year for KFC and Pizza Hut India, both from a revenue and from a restaurant EBITDA percentage. And even in Sri Lanka, despite all the challenges that the country has faced, we were able to grow revenue in Lankan rupee terms by 48%. And despite 100% inflation, our restaurant EBITDA remained flat in LKR terms. And today we continue to remain the number 1 QSR brand in the country. Now talking about our Q4 numbers, our Q4 consolidated sales of 5.59 billion, we grew it by 13% year on year. India restaurant sales within that grew robustly at 23%, and therefore the Lanka business contributed to the gap between 23% and 13%. Same-store sales were, however, challenged as we have continued to experience post-Diwali 22. And you would have read that our GDP growth rate dropped from 7% plus in April in the first half to 4.4% in October, December. I'm quoting these numbers just to indicate that at a macro level, demand conditions were tough. But we believe that such conditions are actually opportunities for us. What do I mean by that? Generally, consumers revert to trusted brands in a tough macroeconomic condition. And we believe that the two power brands that we have got, KFC and Pizza Hut, we can gain differential momentum if we launch a robust marketing and activation calendar. So starting April itself, both brands have launched both a strong product innovation, as well as increased marketing investments, and I'll talk about that in a minute or two. Restaurant EBITDA remained flat year-on-year in absolute terms. Margin was 16.2%, down 210 basis points over last year. Again, primarily due to the adverse Sri Lanka impact. India restaurant EBITDA grew in absolute terms by 19% and margin was 16.5%, down 50 basis points, primarily due to Pizza Hut. Our consolidated EBITDA post Ind AS was 1.03 billion or 18.4%, and that declined Y-on-Y by 1%, down 260 basis points. A consolidated adjusted EBITDA was 56 crores or 10.1%, which declined year-on-year by 11%, largely on account of the Sri Lanka impact. Consolidated PAT came in at 136 crores or 24.2% due to a deferred tax credit of 125 crores in this quarter. Consolidated adjusted PAT before this deferred tax credit is 187 million or 19 crores, 3.3% in Q4 of FY23. While consumer demand, like I said, in India has remained little muted over the last few months, we believe that this is a near-term concern only, and we have continued our pace of expansion in Q4 FY23 with a total addition of 28 restaurants, 16 KFC and 12 Pizza Hut, and none in Sri Lanka, where we are adopting a more cautious approach on our new restaurant expansion in the next 12 months. Now we will cover the business or the performance of our three business verticals, and I'll first start off with KFC. I'm referring to slide number 20, where we wanted to give you an idea of what are the brand priorities that we are driving. Firstly, I'd like to say that these are the brand priorities that we drive jointly with Yum. And our first priority is to enhance fried chicken category relevance. While KFC is synonymous with fried chicken, we would like to grow its relevance with Indian consumers, and this is largely a marketing and communication task. Among all related QSR brands, KFC scores the highest on taste, and therefore enhancing our what we internally call craveable taste credentials is an important priority. While core product innovation remains the largest contributor, we also look at other innovations, and I'll give you examples that we have run through the day. So Chizza is a core innovation, whereas we have done chicken popcorn with Maggi or popcorn nachos in the year that has gone by. Thirdly, value is absolutely key in the QSR industry, both entry value and abundant value. And while our bucket options offer the consumer abundant value, we are very, very excited with the launch of chicken rolls in April. This price point starts from 99 onwards, and we have seen very good traction behind this launch in April. We are sure that it will contribute to driving transactions on the brand and increasing our snacking day part. The fourth priority is to ensure that the customer has as frictionless an experience as possible, and we are making a big play with our digital kiosks that we piloted in about 16 restaurants last year, but this year we will be upping that significantly. I have spoken about our operational excellence initiative of 7 minutes or free chicken. Our scores are in the high 90s here, which means that and this is an important driver of customer satisfaction. And finally, we believe that accessibility is also critical to driving demand, and we continue to implement towards our ambition of doubling the store count in 3 to 4 years' time. This year we have opened a record 78 stores of KFC in the year. Vijay Jain, our CFO, will now take us through the KFC numbers.
Yep. I'm starting on page 28 with SSSG of 2% in Q4. It was partly impacted by the soft demand conditions which continued post-Diwali, and also partly by the fact that Navratra festival this time shifted to March, vis-a-vis last year was in April. This 2% SSSG has also come on the back or with additions of 78 additions in restaurant count, that is 30% additions in last 1 year. Overall revenue grew by 24% to 369 crores, and annually we delivered approximately 1450 crore revenue on the brand, which is growth of 40%. Gross margin for the quarter, while it dropped by 110 basis points, there was a sequential improvement of 30 basis points on gross margin. And if you compare to Q2 of this financial year, the total gain sequentially has been 120 basis points on gross margin. So definitely we have seen some cooling off on inflation, and that improvement in gross margin over last 6 months shows it. Restaurant EBITDA was at 19.1%, despite a low SSSG of 2%. This is on back of cost efficiencies that we were able to deliver 10 basis points improvement vis-a-vis last year. And overall on KFC we had the best ever year with 78 store additions, that's highest ever, revenue growth of 40%, and highest ever EBITDA percentage of 19.4%, which is up by 70 basis points.
Going now forward to Pizza Hut. We had an excellent first half on Pizza Hut, and with the slowdown that we've seen post-Diwali, perhaps it impacted Pizza Hut slightly more. Our SSSG is negative. However, importantly, our SSTG, same-store transaction growth, is positive because we believe because of the big value play that we have made. But I'll talk about that in a minute or so. I think importantly, when we look
Ladies and gentlemen, please stay connected. The line for the management dropped. Participants, please stay connected while we rejoin the management back to the call. Ladies and gentlemen, please stay connected. Please stay connected while we join the management back to the call. Thank you for your patience. We have the line for the management reconnected. So you may go ahead.
Yeah, can I go ahead?
Yes, sir.
Yeah. So I was saying we had an excellent first half on Pizza Hut, and we believe that we've got all the levers of the consumer proposition on Pizza Hut in place, and the brand competes well in the category. And while the last 6 months have been slow, we are quite confident about the prospects of this brand. So our first task on Pizza Hut is to build top of mind awareness. We find that so apart from digital advertising, first time we are on mass entertainment television also, and we intend to sustain this marketing presence for the we intend to sustain this marketing presence going forward. The marketing campaign, which you can see in slide number 35, employing two celebrities, Saif Ali Khan and Shehnaz Gill, broke on April 20th. With the launch of our 10 new pizzas, and that's the second priority that I wanted to talk about. That Pizza Hut has taste leadership in this category, and with the rise of competition, I think it's extremely important to reinforce what a great pizza tastes like. And therefore, the launch of 10 new pan pizzas in April, two new pastas. We have expanded our garlic bread range with a keema garlic bread. Also, the new pizzas are very flavorful, very moist, and again, consumer reactions are positive on this. Value, like I said earlier, is also important, and Flavor Fun continues to do well. And today Pizza Hut offers as good, if not the best value in the pizza category. And therefore it goes back to, with taste leadership and value, it goes back to the first priority that we have to enhance the top of mind awareness of the brand as we go forward and invest in both television, digital, and higher marketing spends. Frictionless customer experience is our next priority. So apart from the native Pizza Hut app launch, which happened earlier in FY22, we also launched a self-ordering QR code-based dine-in digital solution, which has also got good response from consumers. Operational excellence is our fifth priority, and we are using technology to simplify our back-end operations. We have invested in two technologies, Dragontail and HutBot, to help us drive operational excellence. And like on KFC, accessibility is very important. We are on track to double our store count every 3 or 4 years. And what is going to aid us in this process is the launch of our 1,000 square foot model with the same number of covers as a 1,200 square foot model, which means that we have tightened the back end. And this we believe can work to increasing density of our stores in the larger towns. I'll hand it over to Vijay for the Pizza Hut numbers.
Yep. I'm on slide 42 on average daily sales. So SSSG was -4% for the quarter. And as Sanjay mentioned, the SSTG, the same store transaction growth, continued to remain positive. And so that's the heartening part. 67 store additions in the last 1 year. That's 30% on our previous year's base. Overall revenue grew by 18% to 122 crores for the quarter, and gross margin dropped by 50 basis points. That's also a sequential drop of 10 basis points. Our restaurant EBITDA came at 8.6%, which is a drop of 290 basis points over previous year. This was largely on account of the negative leverage or the operating deleverage we get because of the lower or negative SSSG. However, having said that, the overall year, while H1 was H1 was great for Pizza Hut, H2 was slightly softer, but overall we still had the best ever year for Pizza Hut, with highest ever store additions of 67, revenue growth of 41%, and highest ever restaurant EBITDA margin of 13.3%, which is up by 190 basis points over last year.
A quick note on the Sri Lanka business. Today, operational constraints are few and far between in Sri Lanka. So, from an ability to import cheese to availability of utilities, all operating conditions have largely normalized. The economy is also gained because of the IMF loan being sanctioned, India rolling over credit. So things have stabilized in the country. Actually, the dollar rate has also, the Sri Lankan rupee has also appreciated marginally versus the dollar. So it used to operate at 360 to a dollar. Now it's operating anywhere between 320 and 330. So the signs on Sri Lanka are positive from that perspective. However, the impact has been very high on customer wallets, and we are seeing big transaction drops on the brand. We have lost transactions definitely, but with our omni-channel presence, with our delivery capabilities, with the kind of stores footprint that we have got, we continue to be the number one QSR brand in the country. And Vijay will now quickly take us to the Sri Lanka financials.
So slide 49, SSSG for the quarter was -3%. We had 19 store additions in last 1 year. That's 20% on the previous year's base. Overall revenue grew by 10% in Sri Lankan rupees. In India rupees, on translation effect, it declined by 27% for the quarter. The gross margins dropped by 390 basis points year on year, and overall restaurant EBITDA was 14.2%. So while the SSSG has been challenging, what you can see, the settling down of the restaurant EBITDA in and around that 14% mark over the last 3 quarters, which makes us feel that this is probably the bottom what we are seeing in that country on the business performance at the restaurant EBITDA level. From here onwards, we hope that over a period of time, we should be able to go somewhere around that 20% restaurant EBITDA mark, which we used to get a year back. So hopefully over 12 months time to 24 months time, we should be able to go back to that particular level. So overall, 48% revenue growth in Lankan rupees. And in spite of all the challenges which Sanjay spoke about, the Lanka EBITDA in absolute terms has remained largely flat year on year. So that's the heartening side. And we continue to remain the number one QSR player in that particular country.
So while closing, I want to say that we've had a tough last 6 months, but this is what the entire industry has seen, and there are overall weak consumer demand conditions. In the past, I have noticed that consumer behavior in such conditions always favors the trusted large brands, and they tend to do better in these conditions, and therefore actually we are looking at this situation as an opportunity. Both KFC and Pizza Hut are quite well placed to perform differentially in this environment. All our consumer proposition levers are in place, and we have doubled down on both innovation as well as on marketing starting end of March and in April. The launch of chicken rolls for KFC and the launch of 10 new pizzas and appetizers along with Flavor Fun and the television campaign is really an indicator as to how we believe that we can perform well even in market conditions like this. That's all from us. We will now open it up to questions. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Jay Doshi from Kotak Securities Limited. Please go ahead.
Hi, good afternoon. Thanks for the opportunity. Sanjay, my first question is on this weakness we are seeing in pizza category. In the past cycles, we have not seen the kind of divergence between different QSR categories that we are seeing this time, between KFC, Pizza Hut, maybe even Domino's and burger. So what is your reading? What do you think is the problem with the category? Or
So while the SSSGs are different, KFC is 2% SSSG and Pizza Hut is negative. From a transaction perspective, actually it is a little opposite. KFC is negative transaction and Pizza Hut is positive. So I'm not sure whether that hypothesis actually bears out there, that pizza category is doing either worse off or other categories are doing better off. We don't know what the other pizza brands will come in at. But at this moment, I think it is a largely secular slowdown that we believe is happening. And then when you factor in new store additions across different QSR brands, if you see the total system growth also you have to compare, because if one brand has perhaps opened less number of stores, it will impact positively on same-store sales growth. And in our case, over our base of last year, we have opened nearly 30% more stores, and therefore we've always called out that our SSSG ambitions would be in the region of 5 to 7%. So I think it's not that pizza is doing worse off than other categories is my submission.
Okay, let me ask you one more on the same thing. What do you pick up when you talk to the food aggregators? Yum being the largest partner for both Zomato and Swiggy, I believe you would be getting some color or intelligence on overall what they are seeing for this category on their platform.
Yeah.
The idea is there a similar level of weakness or softness on food aggregator platforms also, or do you think there is some competitive change in competitive landscape with a lot of new brands eating into?
Yeah. So in general, there is a softness that we see even on the aggregator platform and on aggregator deliveries. So in general, we see that. Specifically, there might be some brands with a higher level of discounting that might do a little better in the short term. And if we are consistent on our discounting, then there might be a little up and down. But I think again, we are seeing this softness even with our aggregator partners.
But is that for Pizza Hut brand, or is that you're referring to softness for the entire category?
At least on both our brands, we see that.
Understood. One bookkeeping question there. What percentage of your delivery orders are now delivered within 30 minutes? Can you give us some color around it in terms of how delivery metrics have improved over time?
Yeah.
So right now for Pizza Hut, right, 85%, around 85% of our orders gets delivered within the 30 minutes time.
Yeah, and about 94% gets delivered under 40.
Understood. That's pretty impressive. Second question is, can you call out, give us some color on your store opening guidance for FY24 and CapEx guidance as well?
So again, Jay, we have refrained from giving an annual store opening guidance. As we have called out previously, we could double the count on the base of December 21 over 3 to 4 years. That remains, we are on track, which converts to annual number of anywhere between 130 to 160 per year. So we are on track for that particular number. As Sanjay said previously, that we believe the softening is near term, so our expansion plans continue. If we see that this softer demand continues for a longer time or a longer period, at that point in time, we'll definitely recalibrate our approach. But at this point in time, we are on the track for that 130 to 160 range.
And what will be the CapEx for the year?
So again, as I said, we have not given out the total CapEx guidance for the next year, but for a per store basis, KFC is in the range of 2 crore rupees. It used to be 1.9 with the inflation. It's now more around 2 crore rupees for KFC. Pizza Hut used to be around 1.4. Now it's more around 1.5 crore rupees per store.
Correct. So when I look at your FY23 numbers and the store additions versus overall capex of 380 crore, ballpark, I get that about 70 to 80 crore is spent on refurbishment or some upgradations. So is that sort of a higher number than the normalized number, or is that something that we should expect every year?
So roughly, and again I'm giving approximate number, roughly 40 odd crore rupees would have got spent on the refurbishment and the resizing, and there would be included some major refurbishments as well. The balance will also be the maintenance capex as well as the IT capex which would incur, and even the warehouse capex. So it would be a combination of all those, but the refurbishment capex would be in the range of 40 odd crores.
Understood. But is this something that we should model in or bake in every year, or was FY23 a year where this number was a bit higher?
I think the next couple of years probably yes, because these are the refurbishment capex of our legacy stores, some of the old stores which were sized in the range of 2,500 to 3,000 square feet. But post that we have been opening the tighter format stores. So we expect as we move around 2 years, 3 years down the line, the per store refurbishment capex will certainly come down.
Also, Jay, our legacy stores are much older stores, and they have come up for their major refurbishment after 10 years, and that's why perhaps our per store costs are slightly higher. Our newer stores, we will see this cycle, a minor refurbishment cycle, which is much lower in terms of capex per store, as we go forward. But I think in the next 1 or 2 years, there is also a significant, so once you do a significant upgrade, there is also an upgrade that you get on sales. So it does pay for itself over a period of time.
Thank you. Sorry to interrupt you, Jay. I'll request you to join the queue again for a follow-up question. A request to all the participants, please restrict to 2 questions per participant so the management can answer all the questions. The next question is from the line of Tejas Shah from Spark Capital. Please go ahead.
Hi, thanks for the opportunity. A couple of questions from my side. Sanjay, you spoke about the divergence on trend between KFC and Pizza Hut, and you said that there's nothing specific to consumer sentiment. But when we just look at a very broader number, like a country in distress like Sri Lanka, having an SSG of -3 and India having -4, obviously on the low base Sri Lanka is there, but still, don't you think that somewhere either the resilience of our brand in pizza in Sri Lanka is much better, or perhaps the distress that we are seeing on pizza as a category is much louder in India? How do you read that?
So Sri Lanka, the first half of Sri Lanka, because of the pricing that we got, was because of pricing that we took. So we would have taken nearly 50-60% pricing, and in response to inflation, which was about 90%, and therefore SSSG is -3%. Transaction decline is in high double digits. So I don't think the parallels that you are drawing between Sri Lanka and India exist. The Sri Lanka business has got impacted much more significantly from a transaction basis than India.
Very clear. And you spoke about SSG being negative in Pizza Hut, but our STG has been in positive territory. Does it mean that downtrading has actually played a very major role? And you briefly touched upon that, but if you can elaborate, how should we think about that dynamic playing out in FY24 going ahead?
Correct. So I think this has been one of the key pillars of the Pizza Hut strategies, which was to pivot towards QSR kind of pricing. It first started off by us stopping our high-low discounting strategy in April 29, going to everyday value, then to meal options, and finally culminating in the launch of Flavor Fun. Today the kind of pricing and the average order value that we see on Pizza Hut is what we expect to continue as we go forward.
Yeah. And if this trend has to continue, would you revisit? So you spoke about that. Perhaps if this weakness continues for a longer period, you will revisit your store expansion guidance. But how long will it be? How long will it be that monitoring period? Will it be 6 months, 1 year, or will you respond a bit earlier on the store expansion guidance?
So it is important to note, Tejas, that the machinery on new stores is not a switch-on, switch-off machinery, and many of the calls that we take have been baked in earlier, and hence we are saying that we have to project calmness in this scenario. So I think over the next 6 to 9 months is when we would take a call on what we need to do from a store addition perspective.
It is the current marketing plan and the new launches which we have done would start playing out the results, or we can start seeing the results over the next 3 to 4 months. And I think that's the time that how those marketing initiatives and the new product initiatives has gone through. And maybe that's the time, if the softness still remains, that's the time to probably rethink.
Very clear. Thanks and all the best.
Thank you. A request to all the participants, please restrict to 2 questions per participant. The next question is from the line of Nihal Jham from Nuvama. Please go ahead.
Yes, thank you so much. Good evening, Sanjay and Vijay. 2 questions. First was on Pizza Hut and KFC. You highlighted that while you've seen transaction growth in Pizza Hut, there has obviously been a fall in the average bill value, and is the opposite way which is played out for KFC, and you've taken price hikes of around 9 to 10%. As things improve or revive, which of these 2 would end up catching up faster or reviving further?
Which of these 2 from
Revive faster.
SSSG or transaction?
SSG perspective overall, because there is a divergence in terms of how the SSG is played out for the 2 formats. It's different. That one has seen a fall in the footfalls, whereas the other one has seen a fall in the transaction value.
Yeah. So if you look at the answer to that lies in the kind of price increases that we expect from going forward from here. On both the brands, we are seeing inflation having cooled off, and therefore pricing today will be very modest. And I think from here onwards, both SSSG and transactions will start to go in the same direction. In KFC also, the launch of our entry value innovation, which is chicken rolls, will help us in our transaction growth. One simple adage that we try and follow is that transaction growth finally is the important barometer for a brand, and it's not only same store transaction growth but overall transaction growth also, because our number of stores that we have opened also is quite high. As long as transactions are growing, the brands are in good health, and going forward with inflation cooling off, pricing then reverting to the kind that we have had in the past, I think both will start to see upward trajectory.
Just one follow-up there, Sanjay, that in case of KFC, as there are launches maybe at the value end with the 99 roll launch and all, that going forward, is there a case where the transactions come back and maybe similar to Pizza Hut, the ADS maybe contracts a little and maybe the SSG stays flat irrespective of how the market turns out?
So I think it's you've got to do both, Nihal. You've got to have innovations that are aimed at the brand loyalist and therefore things like pizza, work with the brand loyalists, and you have to look at customer acquisition innovation. So chicken rolls perhaps do a bit of both. They talk to the brand loyalists and give them one more reason to come to KFC, but also because of their attractive price points, so they'll attract a new consumer. So I think we should see both SSSG and TG move up now through this launch. So it's not one versus the other.
Thanks. Just one final question was on the store sizes for Pizza Hut. Ideally, we used to target 1,500 square feet kind of omni store sizes. Are these 1,000 square feet sizes, despite say the lower space on kitchen, still serving the purpose in terms of giving the omni experience, which in a way differentiated us, say, from our sister brand, our sister company, which is opening more delivery-focused stores?
Yeah. So we are not doing 1,500 square foot stores, Nihal. First of all, we have done 1,200 square foot stores right across. This 1,000 square foot format does not compromise one bit on the front of house dine-in experience. What we have seen is that because in the larger cities, through increased delivery cycles, we are able to crunch the back of house kitchen, and a large portion of the back of house kitchen goes into storage, both chilled as well as frozen as well as dry. That we are able to crunch because we are in the large cities. So this format won't work if we are going to a slightly more remote city. So this is only to enable us to increase density.
Got that. I'll come back in the queue. Thank you so much.
Thank you, Nihal.
Thank you. Next question is from the line of Percy Panthaki from India Infoline. Please go ahead.
Hi, sir. First question on innovations. These innovations which you have written in terms of popcorn pizza, chicken popcorn with Maggi, popcorn nachos, and pizza. These few months or weeks back were visible on Zomato, but now they are not. So, have you withdrawn these launches, and if so, why?
So, Percy, first, hello. Secondly, to answer your question, these are limited time offers typically, Percy. So there are some innovations that come and stay as part of our menu forever, and there are innovations that we run for a limited period of time. So chicken popcorn with Maggi and nachos was a limited time offer.
And for example, chicken roll is a permanent addition to the menu. So there are LTOs, as is what we call internally. LTOs are limited time offers, and there are some permanent additions to the menu.
Yeah. So chicken rolls is a permanent addition to the menu.
And what parameters or metrics do you use to determine whether it will be a permanent or a limited time offering?
Yeah. So during the process of new product innovation, we would have tested with consumers, and there are parameters that we use for acceptability. Is there a new occasion of consumption, and what need does it serve? After looking at much of these parameters, then we decide whether it is a limited time offer or a permanent offer. Finally, also importantly is, while we will do all of this testing, performance in the marketplace is really important, and so that's the final determinant.
Okay. Also on the same topic of innovation, just something I noticed was that a company like McDonald's, most of the innovations in recent times are towards the premium end. Their gourmet burger variants are actually what is driving the SSSG in a meaningful way now. Whereas I see that our innovations are largely towards democratization, affordable price points like chicken roll at 99, flavor fun pizza, etc. So just wanted to understand why the differential thought process, and does this really help in this kind of an environment where, for example, flavor fun pizza, whatever gain you have got in terms of attracting new users or transactions, the detriment in terms of downtrading has actually more than offset that. That explains the negative SSG at a net level. So just wanted to understand if probably this could have been launched at some other time when the situation was more normal and not stressed like this.
So first of all, Percy, innovation is a long game. So this is not a quarter-on-quarter game. And at a period of time, you are seeing both our brands launching value innovation. So this is coincidental. This is, like I said, a period of time that you have seen. You've seen these innovations. There's no grand plan that either both of these brands will only launch value innovation. So that's the first thing that I would want to say. In fact, the April innovations on Pizza Hut, and it's just not a topping. I mean, I'd invite you to go and try the product out, but mouthfeel, etc., has substantially improved. There's much more moistness in the pizzas. And so while we are saying 10 new pizzas, actually this is our core range that has got completely redone. So, and again, brands have different objectives at different times. Largely, you are trying to appeal to the brand loyalists, and when you are appealing to the brand loyalists, premiumization is an important factor. So, Pizza, for example, does really well with the premiumization, aspect that we want to drive with the KFC brand loyalists. And at times, you also want to expand the consumer base, and therefore, Rolls plays a good role. It also plays a very important role in expanding the usage occasions for the same KFC brand loyalists. So give him or her an occasion to come, say, between 3 and 6 and snack on our products and so on.
Right, got it. And finally, just wanted to get some idea on this Pizza Hut margins. So this time we had a negative 4% SSSG, and the margins is around sort of 8.5%. Assuming that, in the near term for the next 2-3 quarters, if let's say our SSSG comes to a 0% kind of a level, what kind of margin range will be looking at? Will be like 10 to 11% will be a fair number to look at for the next 2 to 3 quarters under an assumption of 0 SSSG?
So again, Percy, I would not comment on the next 1 or 2 quarters percentage, but yes, if your negative SSSG comes to flat or starts going to positive, we should come back to double-digit restaurant EBITDA.
It's also a factor of ADS, Percy, that it went down to 50 ADS, so it's also a factor of that.
But yeah, SSSG becomes neutral or positive, it will be on the last year's SSSG in H1, which was pretty healthy ADS. So you are right. If you are able to get it neutral or positive, it will come back to the double-digit restaurant EBITDA levels.
Right. That's all from me. Thanks and all the best.
Thank you, Percy.
Thank you. Next question is from the line of Saurabh Kundan from Goldman Sachs. Please go ahead.
Hello. Thanks for the opportunity. So when you set out into this quarter, or maybe were in the middle of the quarter, were your expectations lower than what you've actually delivered, especially on the Pizza Hut side? So in other words, has March, despite the difficult base, has March surprised you slightly positively? And if you could also comment on how 1Q has been till now, that will be very helpful.
So I don't think March was any better or any worse on Pizza Hut. I think it continued in the same tradition, in the same manner. Quarter one generally sees an uplift in absolute terms from the Jan-March quarter, and we've seen an uplift. But I'm not going to, it's really too early to talk about quarter one. But the general movement that we see from Jan-March into April, May, June is what we have noticed this year, but on the base that we are delivering in April, May, June. In the case of KFC, March was muted because Navratri, 9 days of Navratra and Ramadan all impacted us in March significantly.
Right. Second very quick question. What is the non-cash component of corporate overheads this time or for the whole year?
Sorry, just repeat that.
What is the ESOP part of the corporate overheads this quarter or for the whole year?
ESOP cost for the year would be anywhere between 0.7 to 0.8% of revenue.
Right. Just a last one, if I can squeeze one in. Another QSR player reported, and although the raw material profile is different, but they reported like a very large expansion in gross margin. Can you comment on what drives this difference? For both your formats, you've seen a drop in gross margin year over year versus like 300 basis points plus increase for the other player.
So sequentially, KFC has improved. On Pizza Hut also, the only pressure is on dairy right now.
So again, both the key components of each of our brands. So one is chicken for KFC, saw the highest ever inflation in H1 in particular, and since then we have seen some cooling off and some recovery. Again, oil is a very big component for us and chicken. On Pizza Hut, dairy probably amongst all commodities, and not just for pizza as a category, but dairy amongst all commodities has seen highest ever inflation. And that's probably the reason for why are both the brands who have seen a negative or a drop in gross margins. Having said that, in spite of a drop in gross margins, as we said, we have reported an improvement in restaurant EBITDA margins year on year for both the brands. On the other side, while I should not comment on the other competitor, but we believe their cafe business would be typically a cafe business is a high gross margin business, and that could be a mix which would be a play. Also, I heard in the commentary that there was some reclassification by them on some processing charges from the cost of goods sold to other expense line. But again, very difficult to comment on their side.
Sure. Thank you very much.
Thank you. Next question is from the line of Devanshu Bansal from Emkay Global. Please go ahead.
Yes, sir. Hi. Thanks for the opportunity and congrats on big menu revamp and associated marketing. Sir, for KFC, last year ADS was about 145,000 and we have exited Q4 with about 127. Similar trends go for Pizza Hut as well. So is it correct to assume that the SSG outlook that you have mentioned is a combination of decline in first half followed up by a strong turnaround in second half?
And you're referring to which outlook? I think you're referring to the 5 to 7% comment which Sanjay made.
Yes.
But that's a comment we would have said, you would have heard Sanjay saying over a long-term 3 to 4 years scenario. That's what we expect with the kind of growth ambitions we have in terms of store additions, which is doubling the count over 3 to 4 years. We believe a 5 to 7% SSG over a 3 to 4 year period is a reasonable assumption to go. But this does not indicate in any way what the next or immediate quarter is going to look like.
No, so even if I just want some sense, as in last year for Q1 it was 145,000 and Q4 exit is at 127. So is this largely because of seasonality or we can see, on a sequential basis such kind of a pickup in this quarter which is going on?
ADS fund, there are two parts to it. So one is seasonality, definitely. Also with the new store additions, Typically, a new store for us would start anywhere at 75 to 80% of the overall brand average in year one, and then take 3 to 4 years to scale up towards brand average. So as you keep adding more and more new stores, which starts at 75 to 80% of the brand average, it impacts the overall ADS. So that's the reason why what you have seen. Having said that, Q4, apart from seasonality, has also been impacted by Navratra in March quarter. In March month.
And what is the typical Q4 to Q1, since these are close and home quarters? So I guess what is the typical pickup in Q1 that you see after Q4?
Unfortunately, these movements in festival period can make it very difficult to predict that what has been the exact. And other than festivals over last 3 years, the COVID impacts from one quarter to other quarter means that there is no specific trend which you can rely upon. However, generally we could see anywhere between 5 to 15% upliftment in Q1 to Q4. But I'm giving you a very broad range and big range as well. But difficult to say because of the last 3 years trend being mugged by various incidents or various reasons.
And this applies for Pizza Hut as well, Vijay?
Yes. Although Pizza Hut gets slightly less impacted by festival movements, unlike KFC, but yes, you see upliftment in even Pizza Hut in quarter 1 compared to quarter 4.
Okay. And from a gross margin perspective, I just wanted to understand it better. If you could call out on an overall basket basis, so you indicated that dairy is up while others are down. So on an overall basket basis, what is the current level of inflation that you're seeing in Q1?
So we believe the Q4 levels on gross margins, we should be able to sustain on those levels in the near future because the inflation has settled down on both for the raw materials for both the brands, KFC as well as Pizza Hut. So I don't see any further impact on the gross margins in the near future. So what we are seeing is inflation in the range of 3 to 5%. But that we should be able to manage either through a price increase or other cost efficiencies. Hence, we should be able to sustain these gross margin levels in the immediate future.
Okay. Have we taken so far any price increase in Q1?
So in KFC, starting this financial year, we have taken a roughly 3.5% price increase starting April.
Got it. And sir, last small bookkeeping question. So these growth investments toward marketing in this Pizza Hut menu revamp, can this also lead to some margin impact, or this is handled by the master franchisee?
So we are definitely increasing the level of marketing investment from the current levels. However, whether this would impact the restaurant EBITDA, we believe if typically the increase in sales should pay by itself.
Is there any, Devanshu, you said master franchisee, I'm sure you meant Yum, right?
Yeah.
Okay. They're not they're the brand owners.
Yeah, sorry, my bad.
Master franchise. Yeah. Can we move to Shirish?
Thank you.
If you're through, Devanshu. Did we answer Devanshu's question? Did we answer your question, Devanshu? I'm sorry.
No, it was incomplete, sir. Sorry.
It was incomplete. I'm sorry. Let us answer it again.
So you will see an increased level of investments, Devanshu. Again, it's a combination where both the brand owners, the Yum and franchisee comes together and will co-invest the increased amount on that marketing front. Having said that, we believe this should pay for itself with the increase in the revenue. Again, but it's not a short term. You have to sustain it over a period of time. So while immediately you may or may not see result, but if you are able to sustain it over 2, 3, 4 quarters, we believe this will pay for itself.
Got it, sir. Thanks a lot.
Thank you, Devanshu. I hope that was clear.
Thank you. A request to all the participants, please restrict to 2 questions per participant. Next question is from the line of Shirish Pardeshi from Centrum Broking. Please go ahead.
Yeah. Hi, good evening, Sanjay and Vijay. Thanks for the opportunity. Just 2 questions very quickly. Does that 99 rupees chicken roll is driven by the scaling up competition and down trading, or is it that it was pre-planned and this is one more ammunition to expand the transaction growth?
No, this was in the pipeline for quite some time. See, typically our innovation pipelines are anywhere between 12 and 15 months long, because there's quite a robust process of consumer checks, operational checks, then test marketing, operationally test marketing it in a particular area, and then only going national. And here again, there might be new ingredients at play. So lining up the supplier base for new ingredients is also important. So in this case, sort of I'm just using an Indian term, the paratha that goes with the roll was a new ingredient and required us to put up a new supply base. So it's been in the offing for some time.
Just two follow-ups on this. This 99 chicken roll has gone in all 341 restaurants across India, and maybe if you can share quick, I'm not saying the growth, but your aspiration is transaction growth. Has it materially changed in the month of May since the time it is introduced?
Yes, I'm not able to give you specifics on this. Let's to say that it is done better than what we've expected. And the launch is a national launch, so it's not only restricted to our 341 stores, but all KFCs across the country.
No, I'm referring because...
including online.
Yeah. So the point, Vijay, what I'm asking, is that gone with the other partner also? Because you mentioned that you will start advertising. So is that the thing which is I wanted to check?
Yeah. So all, in fact, not just this product launch. Any product launch which happens on KFC happens with other even sister franchisee as well. So both the partners do a launch. It's always a pan-India launch, because that's where the scale in terms of supply chain, in terms of operational feasibility, in terms of marketing plays a role. So it's always a pan-India launch.
Okay. My second and last question on the deferred tax credit, what we have utilized. Is there anything which is balanced and we will utilize the same in F24 also?
So we have not utilized as such. We have taken the deferred tax credit. Now it goes on to our balance sheet. It will get utilized in the future when out of future profits, we will not require to pay taxes. So to the extent of 125 crore rupees tax, there will be no cash outflow in the future.
Okay. All right. Thank you, sir. And all the best.
Thank you.
Thank you.
Yes, sir. A reminder to all the participants, you may press star and 1 to ask a question. Next question is from the line of Amrita from Wealth Managers India. Please go ahead.
Hello. Yeah, thank you for the opportunity. My question is regarding where you mentioned about the store size to be around 1,000 square feet now. So earlier we had around 1,200 to 1,400 square feet stores. So are we planning to change all those stores step-by-step procedure to 1,000 square feet? And this is for KFC or Pizza Hut or both?
I'll explain, Amrita. We use on Pizza Hut, our legacy stores are 2,500 square foot, but over a period of time we have shrunk both the back of house and optimized the front of house, and we were opening 1,200 square foot stores. These 1,200 square foot Pizza Hut stores, we believe in the large cities, 5 to 6 large cities where we've got warehousing facilities close to the stores, can be further crunched to 1,000 square feet. And because we've got shorter delivery schedules to these stores, and hence a 1,000 square foot store with the same number of covers is still able to work. Perhaps anywhere between 10 and 15% of our total store base going forward will be in this size. However, it does not mean that we are going to convert our old stores into this.
So this is only for the Pizza Hut stores?
This is only for Pizza Hut stores, and this is only for stores going forward.
Okay. And like what kind of benefit operating wise do we expect from reduction in these sizes? Is it in the margins?
Again, I would not comment on specific on margins because while we have launched this last year, 7 stores we have piloted last year. H2 was a soft period for Pizza Hut, so we will wait till I comment on the margins of this. But from a capex point of view, this could give us anywhere between 5 to 8% capex reduction.
And the KFC stores are around 1,200 square feet, right? So that will remain the same.
So KFC were always in the range of 1,500 odd square feet, so it would remain in the 1,500 to 1,600 square foot range.
My second question is regarding what is strategy going ahead for the Sri Lanka business?
So on Sri Lanka business, as we mentioned, the operating conditions have stabilized, so which means the forex availability, the power and fuel availability, the raw material availability, the supply chain, everything is stabilized from that point of view. Yes, while the demand conditions have impacted the transaction growth, we believe we are at the bottom of it. Hopefully, we believe over the next 12 months, we should start seeing some small amount of recoveries where we can gain our restaurant EBITDA margins back up by a few basis points, if not more. And hopefully, post 12 months, we expect going back towards that 20% restaurant EBITDA margins. So that could happen from a 12 to 24 months journey point of view on Sri Lanka business. From a store expansion point of view, we believe the next 12 months we would be taking a cautious approach and we'll revisit the situation every quarter on how the conditions are improving, whether we are able to pull back our restaurant EBITDA margins. And as we start seeing positive movements, we'll start opening few stores. So that's the strategy on Sri Lanka for next 12 to 24 months.
Thank you.
Thank you.
Thank you very much. I now hand the conference over to the management for closing comments.
Yeah. Like I said, while closing our earnings presentation, the last 6 months have been tough, but we are seeing this general toughness in the macroeconomic demand conditions. But in such conditions, I want to reiterate and underline, large trusted brands have the potential of doing better differentially. And the marketing program, the product innovation program that we have put on both KFC as well as Pizza Hut, backed with our operational execution excellence, we believe will give us dividends even in such market, even in such conditions. And we remain quite optimistic and bullish about both the brands and the future of the QSR category. Thank you very much, everyone, for participating. Stay safe.
Thank you very much. On behalf of Sapphire Foods India Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.